Americans. I'm addressing you this evening.
All your years of paying tax, you helped us overcome our darkest hour. You, along with every other loyal taxpayer, helped build this nation. Thank you for every life you saved and for every risk you braved, for giving our future generation a healthy start. When you saw many of our vulnerable communities, you provided for them. When you saw our healthcare workers on the front lines battling COVID, you rose to the occasion and gave them the tools to save lives. Without your tax compliance, we wouldn't be able to fight a good fight. Thank you for contributing to the important services our vulnerable communities rely on every day. To all taxpayers and traders, continue to pay your tax because it matters to millions of South Africans who depend on it. Your tax matters.
Good evening, ladies and gentlemen. Welcome to our Provisional Tax Webinar. My name is Nolundi and my role is an Operations Manager at Taxpayer Engagement. It is a great privilege to be facilitating this webinar, and I hope that you will enjoy your time with us and that it will provide guidance and understanding on provisional tax. Before we proceed with the program, please note the following. You will be prompted to complete a short survey when exiting the webinar. Please complete this survey as much as possible, as we'd love to receive your feedback on the quality of the information shared. Please post all your questions either on question and answer board, or you can also send your questions to this email address, provisionalquestions@sars.gov.za. This email address will only be available for the duration of the webinar. Due to the POPI Act, please do not post any personal information when asking any questions. If you are attending this session via YouTube, you will not be able to ask any questions, only those who have registered with this webinar on the Zoom platform. We will try to answer as many questions as possible, either through the question and answer chat box or our live question and answer panelists later during the webinar, or on SARS website under the frequently asked questions. If you happen to experience load shedding, the recording will be available on our YouTube channel for future viewing, and the presentation will be uploaded on the SARS website at the end of the webinar. Our program is divided into 3 parts. The first session is the presentation from our taxpayer education specialist, which will be followed by the e-filing process from e-filing and easy-file expert. And the last part will be the question and answers session by the panel of experts from the questions posted on the email address which is provisionalquestions@sars.gov.za. To kickstart the program of today, help me welcome our keynote speaker, Mr. Farid Khan. Farid Khan is the Regional Director for Gauteng South and has more than 20 years of experience at SARS. He has begun his career in the finance department in 2003, before on to lead the Contact Centre and Megawatt Park, and then the National Contact Centre. Farid was instrumental in the establishment of SARS verification operational functions, which are responsible for all tax verification audits. He holds a Bachelor of Commerce, an Advanced Certificate in Taxation, and a Master of Business Administration. Over to you, Mr. Khan.
Thank you very much, Madam Program Director. Ladies and gentlemen, esteemed participants and honored guests, good evening. I'm delighted to welcome you to this 2023 South African Revenue Services Education Webinar for Provisional Taxpayers. It is indeed a privilege to have each one of you join us today as we embark on this journey of knowledge sharing and empowerment. Taxation, as you're all aware, plays an essential role in the development and growth of any nation. And the commitment of taxpayers like yourselves contributes significantly to the prosperity of our beloved country. Today's webinar stands as a testament to our collective dedication to understanding our tax responsibilities as provisional taxpayers, but more importantly, to enhancing our financial literacy. The world of taxation can often be intricate and evolving, posing challenges and questions for individuals and businesses. However, the aim of this webinar is to demystify these complexities and provide you with the tools and insights necessary to navigate the realm of provisional taxation with confidence and with clarity. Over the course of this session, we will have the opportunity to delve into various topics that are pivotal for provisional taxpayers, from understanding the nuances of income calculation, deductions and allowances, to comprehending the obligations and deadlines that lie ahead. Our experts are here to guide you through these intricacies and to address any queries you may have. At the heart of this webinar lies our commitment as SARS to education and empowerment. We believe that an informed taxpayer is an empowered taxpayer. So as you gain a deeper understanding of your tax obligations and the avenues available to optimize your financial strategies, you not only contribute to your personal success, but also to the prosperity of our nation as a whole. I encourage you to actively engage with our speakers, ask questions, and participate in the discussions. The more engaged you are, the more enriching this experience will be. Remember, this is not just a one-way street. Your insights, your questions, and your perspectives are invaluable to all of us. Before I conclude, I want to express my gratitude to our distinguished panel of experts who have generously devoted their time and expertise to making this event possible. Their dedication to sharing knowledge reflects their commitment to fostering a well-informed community of taxpayers. I also want to thank and express my gratitude to all of you, the responsible taxpayers of South Africa. Your presence here today is reflective not only of your willingness to learn and understand, but also of your willingness to be compliant, responsible citizens of South Africa. Once again, I extend a warm welcome to each and every one of you. Let us seize this opportunity to enhance our understanding, strengthen our financial acumen, and forge ahead with confidence as responsible citizens of this country. Together, we can build a brighter financial future for ourselves and for our nation. Thank you, and I wish you all a productive and enlightening webinar.
Thank you, Mr. Khan, for the wonderful welcome address. Provisional tax is indeed important and has a huge tax implications. Its proper administration will ease tax responsibility. Remember to post your questions on the live question and answer platform or on email address provisionalquestions@sars.gov.za. We also have a new e-filing features that are also available on SARS Mobi app. If you have just joined us, don't worry. The full recording can be found on our SARS YouTube channel. Next on our program will be Kamani, who will take us through the presentation. Kamani Mjali holds a diploma in taxation from UNISA and postgraduate diploma in business administration from Nelson Mandela University School of Business. He began working for SARS in 2007 at Contact Centre, where he assisted with tax practitioner matters. In 2010, he was appointed as tax educator responsible, where he was responsible for developing content and expanding the SARS footprint through outreach and education. Over to you, Kamani.
Good evening to our participants and welcome to the SARS Provisional Tax Webinar. As introduced, my name is Kamani Mjali. I will be running you through the provisional tax process. This is just to mention, the presentation in itself aims to easily to break down what provisional tax is, the process flow of provisional tax, and to make the information for provisional tax as simple to understand as possible. Just a quick one on the SARS vision. We aim as SARS to build a smart, modern organization with unquestionable integrity. We aim to be trusted and admired by any and all government spheres, the public, as well as our international peers there as well. In having said that, we try by all means to make it as easy and as simple for all taxpayers to comply or to meet the tax obligations. We try to modernize our systems to provide a seamless online digital channels for all our systems. This goes with the e-filing process as well as the easy file, and then the mobile app there as well as previously mentioned. We try as well create awareness and clarity and certainty in terms of what the organization does and what processes, your processes and your responsibilities as taxpayers is. And in having said that as well, we aim to make it as difficult as possible for taxpayers not to comply with the tax affairs. Just our points of discussion for today, we'll run through an overview of what provisional tax is. I will briefly explain that exempt income for those taxpayers that are exempt from paying from being provisional taxpayers. We're going to estimate the taxable income. This goes in line with what the provisional tax is. And when we'll then discuss the due dates for submission, as well as the payments for the provisional tax. We're also going to discuss the provisional taxpayers, which are the companies and those companies that do not qualify for provisional taxpayers. We'll also discuss the interest as well as penalties imposed for late submission, as well as late payments for provisional tax. And lastly, discuss the medical aid tax credits, as well as the fees that are tax credits against your taxable income. So what is provisional tax? Provisional tax is not a separate tax from income tax. Provisional tax is designed to allow all self-employed individuals as well as companies to pay over money on a 6-monthly basis. This then gives the opportunity, or rather eliminates the risk for the taxpayer to keep money on an annual basis and pay it over to SARS on submission of the annual tax return form. As mentioned, you pay provisional tax in advance on a 6-monthly or twice a year, rather. The third payment for provisional tax is an optional payment for those taxpayers that feel that they did not pay enough provisional tax during the tax year. So who is a provisional taxpayer? A provisional taxpayer is any person other than a company who earns income which is not remuneration, not an allowance or advance as contemplated in Section 8.1, as well as a person who earns remuneration from an employer that is not registered for income tax. Any and all company as well are also are included in the provisional tax regime, except those that are specifically excluded. And then any person notified by the Commissioner of SARS that there should be a provisional taxpayer. So in the entities that do not qualify for provisional tax or who should not be registered for provisional tax is an approved public benefit organization or recreational club that have been approved by the Commission in terms of Section 30 or Section 30A. Any share block companies or body corporates or persons or certain associations or persons there as well as non-resident owners, as well as charters of ships, as well as aircrafts. Small business funding entities as well also do not qualify for provisional tax, as well as deceased estates. And then individuals that do not qualify for provisional tax as well is not required. An individual is not required to submit provisional tax if they earn an income from from remuneration, or if the taxable income or the taxable income is below 30,000 rand per annum, as well as if any income that is received from any private business does not exceed the taxable threshold for that particular individual as well. So the exempt income in terms of the South African Tax Act, all local dividends are exempt from South African tax for individuals. Interest received as well by individuals for persons under the age of 65. If you do receive interest below an amount of 23,800 rand per annum, that interest amount is also exempt from income tax. For persons over the age of 65, it goes up to the amount of 34,500 rand. And then an apportionment rule does apply from the 1st of March 2023 for interest earned, depending on the number of months for those that interest has been earned. And then in terms of the estimates that must be submitted by a provisional taxpayer, as mentioned previously, to eliminate the having to keep money for a year and pay over the tax once a year, SARS then allows the provisional taxpayer to submit an estimate based on taxable income they will receive for the year. And then based on the estimate that they have submitted, they will then pay the tax portion on the estimate submitted to SARS and the submission of the IRP6 tax return form. These estimates, however, must not include any retirement lump sum benefits, lump sum retirement fund withdrawal, any benefits from any severance benefits that are received or accrued by the taxpayer. As well, the return must be submitted even if the provisional taxpayer does not pay over any amount of money. So whether or not you've turned over a profit, you must still submit that IRP6 tax return form. Then discussing the basic amount. The basic amount is an amount of money taken from the last assessed tax return form. So on submission of previous year's return form, your basic amount will be the taxable income from the last year assessed. All basic amounts must be increased by 18%. So your estimate must be 18% if your last year assessed was more than 18 months after the end of the last preceding tax year. So as currently the due date currently is now the 2024-01 IRP6. So if you did submit your 2022 tax return form, was the last return form submitted, which is 18 months ago. If you submitted a pre-tax return before that, then you must increase the estimate by 8%. As previously mentioned, the last year assessed as shown in the IRP6 will be referred to the last preceding assessment, last year assessed. We also have an example here of Lesego Construction Pty Limited, who have a February year end. On submission of the IRP6 tax return form or the provisional tax return form in the 2022 year of assessment, the taxable income for the 2019 year of assessment or the last preceding year of assessment was 1,200,000 rand. The taxable income is for 2019 year of assessment includes a 300,000 rand taxable capital gain. So we should be calculating the amount Lesego Construction will be paying for provisional tax in terms of the first period. So our solution here for the first period that I did mention will be due on the 31st of August. The taxable income will be 1,200,000 rand as previously mentioned in the example, less the taxable capital gain, which is 300 rand. So the basic amount in this instance will be 900,000 rand. So for the 2022 tax year, the tax rate was 28%, and 28% of 900,000 rand then comes to 252,000 rand for the year. Obviously, because we are making a payment for the first provisional period, we need to only pay half of that amount of money, which then gives us an amount of 126,000 rand for the year. Please note as well, from the 1st of March 2023, which is the 2024 tax year, the company tax rates did decrease down to 27%. So when must the provisional tax be paid? As mentioned, for a company that has a February year end, you do submit the provisional tax returns every 6 months. So at the end of August for a company that has a February year end, the payment is also due on submission of the return form. So the payment and the return must be submitted no later than the 31st of August. Also note that if you do have a year end other than February, You will also calculate 6 months into the tax year and then pay over whatever is due for provisional tax on the last day of the 6th month. The second payment must be made no later than the last working day on the last day of the financial year end. So for February year end, companies that have a February year end, that is also due on the 28th or 29th of February. And then the third payment is a voluntary payment for taxpayers who wish to make an additional payment. Who taxpayers that feel they underpaid their provisional tax, they can make an additional payment. And then for provisional taxpayers as well, also note, you are then given up until the end of September to make that third payment for entities that have a February year end. For companies that have a year end other than February, they are then given a 6 months after the year end as well to make that third voluntary payment there as well. And then our example of the payment dates as well for the 2024 tax year. The first provisional payment for the 2024 tax year is due on the 31st of August. This is next week, Thursday, so please ensure you meet that deadline. The second provisional tax payment is also due on the 29th of February, 2024. And then the third or voluntary tax payment is then due on the 30th of September, 2024. Note as well, the third payment I did mention is a voluntary payment for those taxpayers that feel they did not make the enough payment for in the year. Then we also have an example for an entity that has a May year end. I did mention that due dates then do change, or the third payment date changes for an entity that don't have a February year end. For a company that has a May year end, please note your first provisional payment will be due on the 30th of November, 2023. Your second provisional payment will also be due on the 31st of May, 2024. And then 6 months after the financial year end, your third and voluntary payment, should you wish to make one, will then be due on the 30th of November, 2024. So this is just a layout of what an IRP6 tax return form looks like. It will then indicate the gross income, the estimated taxable income in terms from the gross income, and then you'll calculate the tax amount based on the estimated taxable income. We'll then deduct any of the rebates, and then you'll have the taxable amount, which obviously for a first period is half of what you need to pay. For the second period, it is then the full amount of what is due. And then for companies as well, all companies do need to qualify for provisional tax, and then the same periods or the same due dates then also are indicated or are the same. The first period as well, which is the half of the estimated taxable income for the full year, less any and all employees' tax that is paid for the 6 months. Then we will allow any foreign tax credits for the 6 months in question. Your second period provisional tax is also the total estimated income for the full year of assessment, less any employees' tax that is paid for the full year, less any allowable foreign tax credits that were paid by the taxpayer or the company, and then we less any amount that were previously paid in the first period if there were any payments that were made in the first period. And then the third period, as mentioned previously, is a voluntary period. Then it's total estimated tax for the full year as with the second period. We'll also less any employees' tax that was paid for the full year. We'll also less any allowable foreign tax credits that were paid by the taxpayer or the company for the full year. And then we'll also less any payments made either in the first period as well as the second period. Then whatever is due as a voluntary payment is then submitted and paid over in the third period provisional tax return form. SARS also imposes penalties for underestimation of provisional tax as well. Now, the penalties do differ whether or not your taxable income is more than R1 million or if it is below R1 million. For companies that have a taxable income of more than R1 million, those entities need to ensure that the estimate is more than 80% of the actual taxable income that will be declared on the ITR tax return form. Should the underestimation be less than 80%, we will charge a penalty of 20% of the difference between the 80% amount as well as what is tax due by the taxpayer. And then for entities that have a R1 million taxable income or less for the year, please note that those entities also need to ensure that the provisional estimation is 90% of the actual taxable income that will be declared on the ITR 14. And then for those entities as well, should the estimate be less than 90%, we will charge an amount of 20% of the lesser of the amount that is, or rather the difference between the 90% of what is actually paid. We will charge a 20% penalty on that amount there as well. Please note that there is also a 10% penalty for late payment as well as late submission of the IRP6 tax return forms. Then the penalty imposed on underestimation of actual taxable income in the second period is reduced by the penalty imposed for late payment of provisional tax. Then the commissioner may remit or rather waive the penalties should it be proven that you as the taxpayer did not intentionally submit the return form late or make the payment late to SARS there as well. Please note as well, our interest rates are based on the published on the Government Gazette. And then for the 2023 financial year, or rather 2024 financial year, the current interest rate on outstanding balance is 11.25% up until the end of August 2023. And then from the 1st of September, those interest rates do increase to 11.75% per annum. Interest for provisional tax or late payments income tax is charged on a monthly basis. Also note that interest is only levied for individuals if your taxable income exceeds 50,000 Rand per annum. And for companies, the taxable income for the year exceeds 20,000 Rand. Also note as well that SARS does also give out interest for entities that overpaid any amount of provisional tax to SARS. And then this falls on the 89.4 interest. And then interest is also payable to taxpayers who have exceeded the amount of 10,000 Rand, or the taxable income for an individual is in excess of 50,000 Rand, and for companies as well must be in excess of 20,000 Rand per annum. The interest given by SARS as well is also gazetted in the Government Gazette up until the end of currently 7.25% till the 31st of August. Then as of the 1st of September, the amount increases to 7.75%. And then also note that interest paid by SARS is also taxable in the hands of the taxpayer, with individual and the company, and must be declared on the ITR 12 or ITR 14 respectively on the tax return form. SARS also has medical aid tax credits for people who contribute towards a medical aid. The tax credits is an amount of 364 Rand for the first dependent and 364 Rand for the second dependent as well. So should a person who is a member of a medical aid have one member on the medical aid, so being the main member and a second dependent, that person is then granted a 728 Rand tax credit each and every single month they are a member of the medical aid. And then every other member thereafter is granted a tax credit of 246 Rand per month as well. Also note, the tax credits do reduce the tax payable to SARS. We also do allow taxpayers as well for any out-of-pocket expenses that they can claim from SARS. Please note as well, if you do have out-of-pocket expenses, those expenses need to be at least 3 times the amount of the tax credit, or 33%. What is allowed is 33% of any amount that is above the 3 times the tax credit amount. So as previously mentioned, or rather there is an example on the next page. For persons below the age of 65, it is 25% of any amount that is 4 times above what the tax credit is. So an example is a 65-year-old taxpayer who contributes 3,000 Rand monthly towards a medical aid. And on the medical aid, it is just this person and their wife. So there are 2 dependents. And then we calculate the qualifying medical aid tax deductions for the year end 2024. So to calculate the medical aid contributions, which is 3,000 Rand per month, coming to 36,000 Rand per annum. Calculating the tax credit, which is 364 Rand per member. So that's 728 Rand multiplied by 12, coming to an amount of 8,736 Rand. So we also need to take into account 3 times what the tax credits were. So 3 times 8,073 Rand, which gives us 26,000 Rand, subtracted to the medical aid tax contributions, plus the 30,000 Rand out-of-pocket expenses. So this therefore means if you take into account the medical aid tax credit less the contributions, which gives us a 9,732 Rand, then we add the out-of-pocket expenses of 30,000 Rand. Then we need to calculate 33% of that amount, and then for that particular taxpayer, they will then receive additional out-of-pocket expenses of 13,250 Rand for the tax year. Also note, we are available on the digital channels. Payments can also be made through your banking app or via banking, internet banking. You can also make payments via e-filing. Please note EFT payments are also accepted there as well. On accessing the provisional tax return form, your PRN number or your payment reference number is a 19-digit long reference. The first 10 digits will be the taxpayer's tax number, followed by P, 2 zeros, the year, so 2024 in this period, as well as the period in question. So the second period or the first period at the end as well. The beneficiary ID and account number, which is linked to the specific tax types, needs to be correct as well. For provisional tax, it is indicated as SARS-PROV for provisional tax as well. Please note as well, you do need to ensure that the client's payment reference number as well as the beneficiary code are correct, else your payment will not be acknowledged by SARS. We are available on all digital platforms on SARS. Please find us on LinkedIn, Facebook, and Twitter, as well as our YouTube channel on YouTube. And then please visit our website just to find out more information on SARS. I will then hand over to Ayanda Dakela, who is going to give us a brief overview on the e-filing process for provisional tax as well. I will then hand over to you, Ayanda. Thank you very much.
Thank you, Kamani, for that very informative presentation on provisional tax. And I trust that our taxpayers understand this tax type more better after that presentation. Good evening, ladies and gentlemen. My name is Ayanda Dakela, and I'm the support manager for SARS e-filing and EasyFile. I will be taking you through the e-filing process of completing your provisional tax returns. And I'm not alone this evening. I am joined by two of our e-filing consultants. We first have Nokuthula Mbata, who's a support consultant for Gauteng and the Free State region. And I also have Nomhle Zama, who's a support consultant for the KwaZulu-Natal region. They are able to answer your e-filing questions. So please feel free to continue to post your questions on the live chat as well as the Q&A box. Now that I will be going through this evening. We will look into registering for provisional tax on your e-filing profile. How do you go about submitting your provisional tax return on e-filing? How do you go about correcting an already submitted return on your e-filing profile? And we'll also look into what is very important, which is adding your banking details and making the provisional payments. Now let's look at the steps to register for provisional tax. So you're going to log into your e-filing profile and you're going to select Home at the top. Then you're going to select Tax Types on the left. Then you're going to click on Manage Tax Types Transfer. And then you must click on the action box, which is next to the tax type activation. So this is how your Manage Tax Type screen would look like. As you can see here, you've got provisional tax. The status is not active. We want it to be active. So under Action, you're going to click on Activate. Once you click on Activate, make sure that it is ticked, obviously, and we want the status to state successfully activated. And this is what will allow you to be able to complete your provisional tax returns from your e-filing profile. Let's look at that process now of how you go about submitting your provisional tax returns from e-filing. You're going to select Returns at the top, then Returns Issued on the left. Then you're going to select the period of which you want to submit for. Then you're going to click on Request. You're going to open that particular period. Then on the provisional tax work page, you're going to click on IRP6, which will be underlined. Then you go ahead and complete your provisional tax return. So this is how the process will be followed from your e-filing process, from your e-filing profile. You're going to click on Returns at the top, Returns Issued on the left. Then you're going to select provisional tax. Make sure that you select the period, and this is what will give you the option to select the particular period that you wish to submit for. So in this example, we'll use 2023-02 as an example. So if you click on 2023-02, you will be directed to the provisional tax work page, where you'll see there under return type, IRP6 is highlighted. you click on that highlighted field to actually open up the provisional tax return. Once you have that provisional tax return opened, you will complete it as per my esteemed colleague Kamani recommendations. So you're going to make sure that you complete, and if you're satisfied with the data that you have completed, you're going to click on File, Return. This will submit the return to us in real time. We also note that at times you have submitted a return, a provisional tax return, and realize that there's some amendments or corrections that you want to make. So we do give you that option on e-filing to be able to correct already submitted provisional tax returns. This is how you go about correcting your return. You're going to log into your profile, and then you're going to select returns at the top main menu. Then you're going to select returns history on the left. Then you're going to select the period that you wish to correct, and you're going to click on request for correction to open the return. Then you're going to make amendments and submit. So this is how your returns history will look like. To note, on returns history, you will only see the history of the returns that were submitted on e-filing. So any returns, any provisional returns that were submitted through the branch will not reflect here. This is only your e-filing returns history. So you look at the history of returns you submitted. We'll use 2023-02 again as an example of a return that we want to correct. You're going to click on Open. This will lead you again. Okay, you're going to go to Returns, Returns History, Provisional Tax, and then on the Provisional Tax work page, that's when you'll see the option to Request for Correction. When you select Request for Correction, this will open up your Provisional Tax return for you to make the amendments and submit that to us. Once you've submitted that to us, we will receive it in real time as a correction to your previously submitted return. Let's now look into adding your banking details to facilitate your payments, your provisional tax payments from your SARS e-filing profile. So there's two different options. Let's first look at the option for the individual profile. If you have an e-filing individual profile, this is how you're going to go about adding your banking details. You're going to log into your profile and then click Home at the top main menu. Click on Bank Details on the left. Click on Set Up New Account. Then you're going to click on Add Banking Details. So slightly different for an organization profile. If you've got an e-filing organization profile, you're going to log into your profile. Instead of clicking on Home, this time you're going to click on Organizations at the top, then Bank Details on the left, Set Up New Account, then you're going to add the banking details. So in my example here, it's on an organization profile, where you're going to click Organizations at the top, then Organizations on the left, then you're going to click on Banking Details, and you're going to select Set Up New Account. Once you click on Set Up New Account, we do give you two options to select, but you are only required to select the credit push option. So what this option does is, once you've created payments on e-filing, this will send a bill presentation to your internet banking for you to release the payment. So we also give you three options on how you can go about to make your payments on e-filing for provisional tax or any other tax type. So first, we've got what we call an immediate prompt. So once you've submitted a provisional tax return that's got a liability, e-filing will pick up that there is a liability for the return that you submitted, and a pop-up will come up to say, do you want to make the payment now? So if you click on OK, you'll be redirected to the payment process where you will where you will initiate the payment request. The second option is to make the payment for the provisional tax on that provisional tax work page, which is available on your returns history. So you've submitted a return already and you didn't make a payment. You didn't use the prompt to say, make payment now. You want to make a payment at a later stage. That's when you'd actually log into your e-filing, go to the returns history for that particular period, and you'll be able to see a make payment option there. So that's the two options. And then the third option, which is very important, is the additional payment option. So this option will assist you where you need to pay for your penalties and interests. So you'd use that option to just rectify your account with SARS there. So in this example here, it's from the returns history where you've decided that you're going to make a payment at a later stage. You went to returns history, selected the particular period, and on the work page for 2023-02, in this example, there is an option there that says make payment. And that's when you'd be able to initiate your payment to SARS. Making an additional payment, which is very important, that's why we're highlighting it, for your payments for your penalties and interests. You realize that you've got a penalty or interest that you need to pay to us. Please log into your e-filing profile and you're going to select returns and then payments and then create additional payments. As you can see illustrated here, it's payments. Underneath payments right at the bottom, there's a create additional payment option. Then you're going to select the tax type. Here we're going to say provisional tax. You're going to put in the amount and you're going to put in the reference numbers as per Kamani's recommendations as well. And you're going to click on make payment, and this will initiate a payment request to your bank. So this is why we are highlighting here. It's very important to note, when you use the payment method from e-filing, all this does is send a bill presentation to your internet banking. So you may have done the payment from e-filing, it has not been completed. You do need to go into your internet banking, look at the bills there. SARS e-filing should come up and you're going to make the payment and release the payment from there. That's how we will receive your payment from our side. So we have successfully gone through the process of activating your provisional tax type on your e-filing profile. We looked at the process of how do you go about submitting your provisional tax returns from e-filing. How do you correct an already submitted provisional tax return? And very important, we looked at how do you go about adding your banking details and also initiating payments as well as making additional payments for your penalties and interests. So that brings me to the end of my presentation. I now hand over to you, Program Director. Thank you.
Thank you, Kamani. Thank you, Ayanda, for the information that you have given us. Next on our program, we have reached the final session for today. The next program is question and answer session, which will be facilitated by Dijang Bokula together with other subject experts. Dijang Bokula is the operations manager in the tax verification division. She joined SARS in 2008 as a graduate audit. Dijang has extensive audit experience, having previously specialized in VAT audits for 9 years. She holds General Bachelor of Commerce degree from the University of Free State. Over to you, Dijang.
Thank you very much, Program Director. It's indeed a privilege to be part of the webinar which seeks to support the needs of our taxpayers. Ladies and gentlemen, good evening. My name is Dijang Bokula, as Program Director mentioned. We once again thank you for joining us and thank you for all your questions. We have received about 11 questions in advance. We also acknowledge the questions on the live chat, and we hope we'll answer all or as much as we can. Keep sending those questions to provisionalquestions@sars.gov.za. Your questions do assist us to test if we are providing enough clarity of your tax obligation as per our strategic objective number 1. Your questions also assist us to improve our processes and your taxpayer experience, as we are committed to making it easy for all taxpayers and traders to comply with their tax obligation. Ladies and gentlemen, as the Program Director indicated, I'm here to facilitate the questions and answers session. I'm not here alone. I do have a panel of experts with me. Panel, I'm going to ask you to please switch your video when I call up your name. Our panel of experts are Kamani Mjali, Tax-Based Broadening and Taxpayer Education. Welcome, Kamani. Vuyokazi Ziklina, Consultant, Taxpayer Engagement. Welcome, Vuyo. Ayanda Takela, Support Manager, SARS e-filing and EasyFile. Welcome, Ayanda back. Hosanna Ditle, Tax-Based Broadening and Taxpayer Education. Welcome, Hosanna. Let's start with our questions. Question number 1 that we received. My question here relates to the 23,800 threshold. Is that amount per individual or per the union if married in community of property? In other words, if I earn 40,000 in interest from the saving, I will be liable for 20,000 rent and my wife for 20,000. Will we both be under the 23,800 per individual and not pay any tax on 16,200 exceeding the threshold of 23,800? Hosanna, can you assist us?
Thank you, DJ. On this question, the answer, if I'm married in community of property, and here you can see that the interest earned by another individual is 40,000, automatically we will split it and both of them will receive 20,000. And however, is below the exempt portion as each individual qualifies interest portion of 23,800 if under the age of 65. So in this scenario, therefore, there will be no taxable portion. So they will be exempted. Thank you, ma'am.
Thank you very much, Hosanna. Let's move to question number 2. Every time I click a return on the left menu, nothing happens. But when I go to the tax type, it shows successful activate on the provisional tax. How can I fix the problem of not being able to request the RP6? Ayanda, can you assist us?
Thank you, Dijeng, for that question. That is definitely a user rights issue. So the user would have to log into their e-filing profile and click on organizations on the top menu, then rights groups, then they must click on manage groups and open the group that they suspect that this taxpayer is in and make sure that the provisional tax type has been clicked. So that's the first option. The other option could be that the taxpayer in itself is not in the group and they need to rectify this by clicking on manage payers and to make sure that they tick this particular taxpayer to be in the group. And it's very important to note that the options that I've mentioned are only available for an organization profile. So if you've got an individual e-filing profile, you'd have to change your profile type by clicking on My Profile, Portfolio Management, and clicking on the 3 dots that will give you the 3 profile types. That's individual, organization, or tax practitioner. Make sure you change it to organization. Once you've changed it, log out and log back into your profile, and then do the steps that I've mentioned here to rectify that user rights issue. Thank you, Dijeng.
Thank you, Ayanda. We are moving along to our question number 3. We are currently exploring the purchase of home jointly with friends. If we were to Airbnb the rent, this property generate 36,000 income within a tax year, assuming each couple is eligible for half of that amount, which is 18,000 as an income. And I earn 24,000 in interest from my saving. Again, as an individual, I will have earned 42,000 additional income. But being married in community of property, will that amount be halved? Or with my wife and each be liable for 21,000? Kamani, can you assist the taxpayer?
Thank you very much for the question. As with the first question, unfortunately, with the interest or investment income, the interest income, both parties, which is the spouse and the partner, will then qualify for the 23,800 Rand exemption on the interest earned. So this therefore means the 42,000 Rand interest, we divided by 2, 21,000 Rand for each spouse, and therefore there will be no tax payable. However, on the rental part of the income, Because you claim expenses against your rental income, unfortunately, there is no exemption on the rental income. So both the partners will be liable for the tax on the rental income earned. Because you are married in community of property, the 36,000 Rand will then be split in two, giving each spouse an amount of 18,000 Rand as taxable income in their own hands. Thank you.
Thank you very much, Kamani. Question number 4. Is the 50% of income earned only applicable to interest from saving or all additional income earned that is part of our estate? Vuyokazi, can you assist us?
Thank you, Tijeng. Thank you for the question. Well, not limited to interest only, all investment income will be apportioned accordingly if married in community of property, unless the taxpayer has indicated on the tax return that it should be excluded from the communal estate. Thank you very much.
Thank you, Vuyo. Our question number 5. Do I have to know that I'm a provisional taxpayer, or will SARS be based on my income sources and taxable income? Hosanna, can you assist us there?
Thank you, DJ. On this scenario, SARS will indicate to the taxpayer whether on the current financial year of assessment, whether he will be liable to be a provisional taxpayer, or however, the taxpayer can also do or perform a self-assessment to actually determine whether he or she is still a provisional taxpayer or not. Thank you, ma'am.
Thank you very much, Hosanna. Moving along to question number 6. I would like to submit and pay provisional tax, but I can't find an RP6 form on e-filing. Ayanda, what can the taxpayer do there?
Oh, thank you, Tijeng, for that question. So this taxpayer is experiencing an issue where they go to returns issued, looking for that provisional tax, but that option is not there. But this can be rectified by them making sure that they activate the provisional tax types, as I've shown in my presentation. And then in terms of the payment, remember that they still have the 3 payment options to make the payment. It's either they're going to be prompted to make the payment after they submit a provisional tax return that's got a liability, or they can at a later stage submit by using the returns history option and making the payment there. And also very important for the penalties and interest, they will use the additional payment method to make payments there. Thank you, Tijeng.
Thank you, Ayanda. Our question number 7. If a taxpayer who operates a business as a sole trader and rents out property from which they make taxable income, and when offset against a taxable loss from trading, resulting in combined net taxable loss, will they still be classified as a provisional taxpayer for the year or for a period in which incurred? Komani, can you assist the taxpayer there?
Thank you for the question, Tijeng. Please note, if you as a taxpayer are not meeting the tax threshold on an annual basis, then you do not need to submit or pay over the provisional tax return form. So that is a 97,550,000 Rand per annum threshold. If you're not meeting that amount of money, then you do not need to submit or pay over provisional tax.
Least but not last, our question number 8. A taxpayer who in a year 1 received income from an employer who is registered for pay as you earn and rents out a property which resulted in taxable income from the letting in a year 2 makes a taxable loss. Is he a provisional taxpayer in year 2? Is there a criteria the income from letting has to result in taxable income in order to be classified as a provisional taxpayer? Kamani, can you assist the taxpayer there?
Thank you for that question as well. As with the previous question as well, if you are not making the taxable threshold, then there is no need to pay over any provisional tax or submit the provisional tax return form.
Thank you very much, Kamani. Our last question that we receive in advance. I know that I acknowledge the questions and the panel is assisting us with answering as much as we can on the chat. Thank you very much. The last question that I received: what is the deadline date for submission of a provisional tax in 2023 and 2024 and the full payment of the provisional tax? Vuyokazi, can you assist the taxpayer there?
Thank you, Dijeng, again. For the due date for the first period, provisional tax period, will be 6 months from the commencement of the year of assessment. For an example, if it is the 1st of March to the end of February, the first period is due on the 31st of August. And then the second period will be due no later than the last day of the year of assessment. We also, for the purpose of compliance, as mentioned before by my colleagues, we also have the third period payment. This one is now voluntary, it's optional. It's also known as a top-up. So if you know that you have not made the full payment on the first and the second period, then you do have a chance to make sure that you make a full payment by the third period. And this one is due from the effective date, which is 7 months after the financial year end. Thank you.
Thank you very much, Buyo. I received another question where the taxpayer wants to know, how do I register for provisional tax as I receive additional income? Ayanda, can you assist us there?
Thank you, Dijeng, for that question. So there's no need to register as a provisional tax as alluded in Kamani's presentation. So provisional tax is not a separate tax that you just need to declare and pay as you are making provision for the income tax liability. All you need to do is to activate the tax type on e-filing as I illustrated on my presentation, then you're good to go in submitting your provisional tax returns, and there's no additional registration required there. Thank you, DJ.
Thank you, Ayanda. Our last question as well that I'm going to represent today. Can a tax clearance be declined if I have an outstanding provisional tax return? Hosanna, can you assist us there?
Yes, definitely. Your tax compliance status will be non-compliant because all the returns need to be submitted for whether individual or company so that they can able to be compliant. So all the returns must be submitted and the TCS by tax compliance status will be compliant. So taxpayers must be aware that they need to submit all their returns in order for their tax clearance to be compliant. Thank you.
Thank you very much, Hosanna. You may continue to send your questions on the platform or via provisional questions at sars.gov.za. Please note this email address is only for webinar related questions and will be closed immediately after this session. For any service escalation, please visit our website. Your questions are important to us as they help us to build our frequently asked questions. Please note that SARS has dedicated service channel for taxpayers where you can easily find information to assist with your tax obligation. This is our SARS online query system, which is on SARS website, www.sars.gov.za. You can also register on e-filing on www.sarsefiling.co.za, or you can also visit our SARS mobile app. You can book your appointment on our website online booking system, or SMS booking space and your ID number. Send the SMS to 47277 for a branch visit, or use our USSD number *134*7277#. Thank you so much for the questions, and back to you, Program Director.
Thank you, Dijeng and the colleagues for your prompt response to the questions. From informative presentations and answers from the questions, we always strive to make the compliance process simpler. I hope everyone in our audience will be better equipped to attend to provisional tax. If your question has not been answered, please look out for the frequently asked questions on the SARS website for the response to your question. Ladies and gentlemen, we have come to the end of our webinar, and I would like to thank you all for your time and participation. I hope this webinar has met all your expectations. Before we close, I would also like to thank all the speakers, the panelists, the organizers, and the IT team for your contributions to this webinar. Remember, this presentation can be found on SARS website, and the webinar recording can be accessed on SARS YouTube channel. Please don't forget to follow us on YouTube, Twitter, Facebook, and LinkedIn. As soon as you leave the webinar, you will be directed to the survey. Remember to complete the survey because your participation is highly appreciated. Also remember, provisional taxpayers need to submit their provisional tax returns and make payments twice a year, end of August and at the end of February if your financial year starts in March. Should there be a need to top up for a top-up payment, you can do that by the end of September, which is the 7th month from the second payment. Non-compliance will lead to penalties and interest being levied. This webinar recording will be found on SARS YouTube channel if you want to go back to see and hear what we have been shared. Have a wonderful evening. Thank you. Goodbye.
All your years of paying tax, thank you for every life you saved and every risk you braved. When you saw our healthcare workers on the front lines battling COVID, you rose to the occasion and gave them the tools to save lives. Without your tax compliance, we wouldn't be able to fight a good fight. When you saw our vulnerable communities, you provided for them. To all taxpayers and traders, thank you. Continue to pay your tax. Your tax matters.